Hello and welcome back to another session of Market Outlook series by Kavita Agrawal. Today we are here again to discuss about what has happened in Nifty this week, Banknifty this week, and where the intersector rotation is taking us. As we know, this week was a very good week for all swing traders or long side bets because the market has unleashed into a super strong bull trend. But the question really is this bull trend going to sustain or are we heading towards a correction? So, without much delay, let's get started with the analysis of a 3 minute chart and then progress to higher time frames for both Nifty and the Bank Nifty. So, this is the 3 minute chart of Nifty. And what I can see is that the superb upside that has started from nearly the end of August has now continued this week also. So this was basically the day of Friday where the market closed with a strong uptrend and it took resistance again it had taken resistance near the level of 19,440. That weekend, I told you that the key resistance for the market is 19,600. And as long as the market doesn't break out above that level, a possibility of a sideways correction will continue. And soon enough, on Wednesday, that is the 6th of September this week, we saw Nifty briefly testing that level with superb volumes. Even though the breakout didn't sustain, the next morning, it was a very clear signal that the market is going to breach. One thing that I want to bring to your attention is that on Wednesday, the FII and the DII data was brought to my attention, and there was heavy selling by them, which had spooked a lot of people, and a lot of people even claimed that my analysis might not come through because of that specific data. And I'm going to tell you what I told those people. The FII and DII data is very overrated. It is not a decider of the market. It's just one piece of data. Don't give it so much importance, especially in your decision trading. Stay objective and take all facets into consideration. So for me, primary consideration is technical analysis on what my charts are saying. And if my chart said that there's been a breach of a resistance with very high volumes, that is a very good indication for me, and I will go with that. So that is what happened here also. Once the price was above the level of 19,600, we can see that the market has rallied nearly 1.35% in just couple days, which is fantastic for Nifty. Moving on to the 15-minute time frame, it looks like the rally has just started, and we definitely expect the market to trend higher. Now, as you can see, there is a support near the level of 19,758, which is, let's round it down to 19,750. I think that's a good support level for the index. And if we look at RSI, the uptrend remains very strong. There has clearly been RSI range shift again to the bullish zone. And I think on the RSI, Nifty, even if there is some correction or some consolidation, support at the level of 40 on the RSI will prove to be beneficial for the index. The 75-minute time frame, well, looking at the 75-minute time frame, we never had a doubt that the bull run was over. I have been repeating in my market outlook sessions for a long time that the correction which started from the level of 20,000 was just a correction. It was not the end of the bull trend or the beginning of a bear trend, and that's exactly what we are seeing panning out right now. So what is the next target? My personal expectation is that Nifty is going to scale the level of 20,600 for multiple reasons. There are key trend lines passing through there, and there's lots of analysis behind that. I will not get into the details, but that is the target that I am looking for on Nifty, 20,600. And right now, the first support would be at the level of 19,750, and the second support would be, of course, 19,600, which is actually a very important support level for the index now. Looking at the daily time frame, nothing's really changed. It still says that a super strong bull trend is underway. So what I am expecting is that in the past, did you see this upside happen, which started on the 3rd of October and went all the way up to the 2nd of December? and this was around a 13% rally, right? So I feel that the characteristics of the wave that is unfolding right now is very similar to the characteristics of this wave. So that is also the reason why I expect that the bull run will definitely continue. Now, one resistance that will come to the index will be at 20,100, which will be near the trend line that you can see on my chart. So 20,100 is expected to be a resistance. The second resistance is expected to be at the target that I just mentioned to you, that is 20,600. Okay, so nothing on the weekly time frame. Let's move on to the Bank Nifty and see what our key levels are and what the analysis there says. As always, we will start with our 3-minute time frame. So we can see that Bank Nifty also has been in a super strong rally and it has breached the resistance of 44,800 clearly. Let's take one step higher. Again, very strong bull momentum. Nothing out of the blue. It has come out of consolidation. It may come down to retest the support at the 44,800 to 44,900 level, but the underlying trend is definitely expected to be bullish. That being said, my primary picks are not in banking stocks right now because I from what I am seeing, there are much better opportunities available. I've been telling you for the past 4-5 weeks that chemical stocks are looking really, really good, and today chemical stocks have given a fantastic run up. In fact, I was just telling the members in my Telegram channel how the market has been so bullish, and the stock recommendations which have been given to the participants of my Trade Together program have done fantastically amazing. So the stock ideas which are given in July and August have gone up nearly 27-28%. And this is just the top few performers. There are 22 stock ideas which have been given, and all of them are doing really well. So if you want to join my Trade Together program as well, the first step would be to join my free community where you can get information about it. And if you're wondering what the Trade Together program is, I will tell you about that after I am done talking about the intersector chart analysis. Okay. Let's go with the other interface because we'll just wait for it to load. There we go. Okay, so I feel like we should look at the movements from the end of August rather than from this thing, because that's when the rally really started. So what we can see is the PSE sector has done extremely well. It's up 8.13% since the beginning of September, which is fantastic. Second closely is followed by Realty, which is 7.26% higher. Next is energy sector, 5.8% up. Then is the commodity sector, 4.7% up. Then is metals, 4.3% up. The CNX infra sector is up 4.1%. The PSU bank is up 4%. The IT is 4%. Now, as you can see, the IT sector is not one of the top winners of the week, but and I expect the IT sector will continue to remain slightly subdued because I'm expecting rally to come in banks. And we know that when banks are very bullish, then IT is not. So I'm not saying the IT sector is going to keep falling. It will not. It's probably go in a more of a lull kind of a state. I'm not bearish on IT, but I'm more bullish on banks for the short term. However, if I have to decide where I want to put my money, I will still not put my money in banks for the time being. I would rather go with IT stocks for a more longer term and a more sustained kind of a rally over the next 6 months to 1 year. So if your time frame is next 6 months to 1 year, then I suggest you go with IT stocks as well. There are some great picks which are available at this point of time, which are super undervalued in my opinion. Okay. Moving on, consumer durables has also been up. So you can see that all sectors basically since the beginning of September have done well. Everything is positive. Another sector that is taking a bit of a break is the pharmaceutical and the healthcare sector, but it's not really a break because there is still upside. But I think the momentum is going to start catching up now. Chemical stocks are no longer attractive for a fresh entry. I mean, of course, there are exceptions, and when I'm giving an envelope statement, it cannot be pasted on every single stock individually. But the chemical sectors, at least that were in my radar, have already given a fantastic run up. There is one stock which is very attractive for the long term is Deepak Nitrite. So if you have a horizon of say 5 years to invest, then just go for Deepak Nitrite with like absolutely eyes closed. I feel it's a mammoth mover. What I mean by that is that it has a tendency to give multi-bagger returns for 4 years and then go to sleep for 4 years where it will fall 30, 40, 50%. And now is the beginning of a fresh new bull trend, which is expected to uh, move in the same way the stock has moved many times in the past. Pharma sector is already given a fantastic rally, right? Okay, finance sector is also one where some good opportunities are coming up. Stocks which have really taken a beating in the last 2-3 months are now beginning to form a bottom and readying themselves to give a good rally in the future. Auto sector, the uptrend is expected to continue. What's next? Metal sector, to obviously hey. Then there is telecommunication equipments. I am expecting something big to happen there because of obviously the 5G theme is an undercurrent and it's here to stay. So that is also one place where you should look at for great opportunities. In fact, I have few picks in my trade together program as well, and they've already started to move, but they're still attractive. Okay. So this is it about the indices. Now, if you're interested in my Trade Together program, let me just tell you what it is. You can find the relevant links in the description. So I'm a SEBI registered research analyst, and in my Trade Together program, I help retail traders make the right trades in the market with well-vetted trade setups. So if you're always confused about what you should buy, what you should sell, see, success in the stock market does not come from just buying, selling stocks. Success comes from buying a stock, the right stock at the right time, at the right price, selling it at the right time, at the right price. Between that, there's a lot of management, and trust me, it requires a lot of monitoring. So, if you are somebody who wants to make money from the stock market by active trading but does not have the time or the skill set to indulge in detailed active analysis, then the Trade Together program would be a perfect mix for you, because that way you can stay in touch with what is going on in the market, because I do a lot of live sessions and I share a lot of knowledge for free through my YouTube channel. And you will also get good stock ideas so that your money doesn't have to suffer because you have an expensive hobby. Okay, so with that, I have come to an end of this market outlook session. Thank you so much for watching. I will see you on Tuesday in my next webinar for the retail traders, where I am going to talk about one theoretical knowledge topic. So I hope you will attend that. It will be live on my YouTube channel and my Facebook page. So I will see you there. Thank you for joining. Namaste.